All right, back at it again. We are off the road and back at the trade station. So, just to get it started, just to get straight into it. Let me close this. Want to put together my pre-market plan for this coming week, as I do with every week. And as we can currently see, we do have the daily, not the weekly. We have the daily for the dollar for the DXY pulled up on the screen here. And something I want to highlight right off the bat is, of course, as I mentioned in my previous pre-market plan, especially with this descending channel break to the upside, we do have a pretty big retracement on the dollar currently happening. A lot of people are calling for 105. There are structures that I'm waiting to be broken prior to really confirm that. Obviously, we have a very clear one here that was knocked back to end the week off this last week at 103 sort of 50, 103.60 area. But also on the same note, we should be seeing the full move into 105. Obviously, the weekly adds a ton more context around that. We do have a local 618 coming up around 104, 103.90 area. But if I kind of take this away, the most recent weekly candle close is, it doesn't have a ton of steam on it, but it is a reclaim, as it currently stands, a reclaim of that 103 area into 105, right? Obviously, it would be great, perfect world, to see a lower high formed here at the 618, at that 104 sort of area. Also, sort of in confluence with this level of structure around 103.50. Sort of in the same area, this is the exact same fib. We would be stopping up just a bit short from that. But I know that I mentioned in my previous market plan that I felt that the rate cuts would be unlikely, or pauses would be unlikely from the Fed. And a lot of other Fed officials, there was a ton of news that came out, a lot of other Fed officials feel the same way, right? There would be no reason to take our foot off the gas when it comes to getting a handle on inflation. And as a result, we would probably want to be moving forward with further rate cuts. But this last Friday, to end the week off, we did have Jerome Powell speak at basically a monetary policy sort of seminar. There was like an open floor for a discussion around inflation, what the current monetary policy for the U.S. is. Obviously, we're off target from our 2% inflation goal, this whole thing, and that's been the kind of narrative that we've been running with all these months. Something I do want to highlight, though, that Jerome Powell pretty much laid out is that because of everything happening in the banking sector and basically all that's happening around tightening credit conditions, we should be seeing a slowdown in inflation because of those factors, right? Personally, I disagree with that. I think that's bullshit. And so as a result, right, like we saw inflation come out this last week. So last two inflation prints were first 5%, and then this most recent was 4.9%, a 0.1%, a tenth of a percent move to the downside as far as inflation is concerned. Obviously, there are more niche numbers. I think core CPI numbers month on month were looked a lot better, and based on different sectors, as far as I could pull up the report here, but I'm not going to do that. You guys can do your own fucking research. But at the end of the day, there were some points around inflation that were looking a little bit better than the 4.9, the 0.1% move to the downside kind of hinted at. But to me personally, overarching picture, right? 5% inflation down to 4.9 is not convincing enough for me to say, oh, the Fed is going to, they're going to pause rates, or they're going to pause their rate hikes and everything else. It just seems so implausible. That doesn't seem practical at all. So we're just gonna have to see, honestly. We do have a couple of different news events coming out. We do have flash services and manufacturing PMI for both GBP and the dollar. We also have new home sales. We have PCE coming out this Friday. We have the FOMC meeting minutes this Wednesday as well. Prelim GDP for the dollar on Thursday. A ton of stuff coming out. It's jam-packed. Primarily Tuesday through Friday, absolutely jam-packed with news. So those will all act as catalysts for volatility when it comes to these different currency indexes. And I'll obviously be wanting to see where we stand as we as we see those press releases. As I mentioned, as far as the weekly is concerned, this is it's not the cleanest reclaim of 103, but it is a reclaim nonetheless. And so it does kind of confirm a further move to the upside, whether that be the 104 or the 105. I know the overarching theme on social media and all over is basically that we are going to be seeing that 105 move. 1 second. And so, excuse me. And so, with that, again, I am of the sentiment that we should be seeing that move into 105 here shortly. As we're looking at it on the monthly, it doesn't add a ton of context, to be completely honest with you. I could kind of draw a zone here, even, right? This is still sort of a level of support, and so with that, we are kind of clinging on like by a thread, as we've seen on the daily, right? Like, we literally hung on to this area, this structure, by a thread at 101.25 sort of area. And so, excuse me. And so, 105 to me is sort of programmed in many respects, unless we see further downside, unless we see some crazy news catalysts like PCE numbers come in super soft, hinting at inflation moving to the downside. Excuse me. I would expect a full move to 105. This is sort of a double bottom sort of structure here as well, so you would expect this to break to the upside. Obviously, that would be like worst case scenario. Like, if they, personally speaking, this is just my own narrative. If the Fed did move forward and cutting rates or even pausing, and we start to see this this double bottom start to develop and break to the upside, that would be worst case scenario, right? Because they're taking their foot off the gas, thinking that they have a handle on inflation because of a 1/10 of a percentage point to the downside. In inflation, that just doesn't seem, again, it doesn't seem plausible to me. It doesn't make any sense to me whatsoever, regardless of, tightening credit conditions around banks and everything else because of how high interest rates are and this whole thing. It just doesn't make any sense to me. Excuse me. And so with it, I hope that made sense. Once again, I am expecting the full move into 105. I need to confirm that, I need to see a clean reclaim of 103.60 area, this level of structure. As we can see, looking left, this was an area of structure that held as both support and resistance. And so this could be either the turning point for price. This could be like kind of a tweezer top before they move back into the 101.25s, or we'll be reclaiming and breaking back above to make the full move into 105. Regardless, I still believe that we'll be seeing a rejection of 105 because it's such a strong level of structure, as we see back here and back here, and back here as well, even though it was short term. This is held as a big level of resistance as well as support for the dollar. This is a bouncer break level at 105 for me. And so, again, I am expecting that move, but to confirm that prior, I need clear strength above 103.60 area. I hope that makes sense. Moving to this JPYBasket. Excuse me. We're seeing a pretty weak yen. All right, nothing really changes for me here. This channel has yet to be broken. We're seeing clear downside on the yen. As I mentioned in previous pre-market plans, we have this sort of reverse martini glass structure sort of forming here. We have the big leg up, sideways movement, which is, some people call it accumulation. And now we have the downside leg forming, right? We're obviously encountering a level of structure, a level of support, as we've seen in the past here. Pretty big level, I would say, a range mid or a range low in this case between the range mid and range high 8,000. But regardless of that, of course, early into the week, we could expect, personally, I wouldn't be surprised to see a quick bounce, seeing as we've held this level of support in the past. But I think it would be short-lived, 100%, and we'll be seeing further downside. Obviously, I would need to confirm that with weakness below 7,500 overall. But we've been trending downward. Again, looking back, you can obviously see the move for itself. We have the big rally up, a sideways accumulation, and then obviously the next move after that would be the move to the downside. Looking at it from the weekly adds a ton more context. This is a weekly range low, right? We finally have the full move of the double bottom here forming. I know that 2 weeks ago in my previous pre-market plan, when we saw this bounce start to happen, I was like, we could see this move into 8,000, stopped up a little bit short, made a lower high, right? And now we're coming back straight back down into the 7,500 range low. Once again, I am expecting further downside for the yen just because of all the obviously fundamental drivers, and then obviously the technicals playing a big part here as well. Excuse me. just overall price looks like shit, right? Like, yeah, I can even pull this up on the monthly. Like, look at how shitty, look how horrible, atrocious this monthly candle is looking, right? Obviously breaking the level of microstructure here around 7,600, and just overall looking extremely bearish. Everything is pointing towards further downside for the yen. Obviously we had the 618 rejection, the downward this descending channel rejection here as well, and now we have another level of structure being broken to the downside. And overall, just the monthly candle's wick to the upside is obviously rejecting any movement higher. And so we could probably target lows as low as 71.96, right? And even looking back here on the weekly, that lines up pretty well here with, let's see, pretty well here as well with both the 73.50 and then we have 72.25. And so let's do this here. Have another sort of range low. Let's put that there. Boom. And so for me personally, obviously, if we continue to break down from 7,500, the next level of structure, the most likely point for price to move into, at least wick into, would be the 72.25 sort of area. As we can see, as structure clearly spells out for us, right? We have solid body closes acting as support here, wicks into this level and everything else. I wouldn't go as far as to say we go to the extreme, right? Into 7,100, 7,150. Structurally speaking, I'd want to lean more towards the weekly and daily to add further context. But again, I am expecting further downside for the yen. Support is still support, so to see a bounce from here, it wouldn't surprise me whatsoever. But I am expecting further downside, and obviously confirming that, I would need to see clear strength below 75.23. Hope that made sense. Moving into GBP, I want to highlight something here as well. On GBP futures, I always talk about how I would love, in the perfect world, for both the pound and the yen to always remain decoupled. And so with that, we're seeing the exact opposite, right? They're moving pretty much in tandem. Like, look at these two charts. Although they're vastly different in overall structure, look at the sort of local price action here, right? I want you to pay attention to from Tuesday here, or my future self, from Tuesday here to like Friday. Look at just the way the candles are forming. They're both at a level of support. Let me go back to the GBP futures chart. We have a little, rounded top here and then a move into this local level of structure at 124. And we're starting to see the pound bounce, and we're also starting to see the yen bounce just a little bit, right? And so with that, I am expecting, especially with the amount of GBP news that we have coming out, flash services and manufacturing PMI, GBP CPI is coming out here as well. I am expecting, again, with that amount of volatility coming into the pound, I would expect that to decouple those two indexes, even if it's temporarily. Regardless of that, those two indexes being decoupled is beneficial to me. Especially with where we're seeing GBP JPY at, right? If we continue to see further yen downside and we see any glimpse of strength on the pound, we're going to the moon, right? As far as structures are concerned, we close within a range. I'm sure I'll get into that here shortly. But it's just eerie to see how similar these two charts look, right? Perfect world, obviously, I would love to have the pound continue to use this level as support. As we can see looking left, this is a local level of resistance turned into support. So obviously continuing to see price trade above this level is extremely bullish. Until we break 124, I'm not going to be changing my tone too much. Obviously we can play it level to level thereafter into 122 and potentially lower than that if we do break. We already had this this ascending channel break here as well, which isn't the greatest sign. I know that we highlight this all the time on this channel. When we see fickle trend lines like this starting to form, we either get the ascending triangle to move to the upside, or we continue to squeeze in between this structure before we break down. We saw the latter, right? We saw the breakdown after the rejection to this local level, or this level of resistance at 126. So honestly, perfect world, I would love to see us at least range in between these levels and see yen weakness if I'm wanting to get into GJPYs as it currently stands. But I mean, if I'm just going off of what the chart is giving me, right? So if we don't see that, we don't see that. It is what it is. But once again, I would love to see the pounds continue to use this level as a level of support, the structure as a level of support. If we break this, looking a little bit dire, I might have to change my tone. Obviously, that would mark a move into 122 at least. And obviously, I would just have to monitor it from there. I'll be monitoring that into the coming week. Looking at this on the weekly though, upside is not convincing whatsoever. Look at the last 2 weeks weekly candle closes, right? Obviously we have the week of May 8th. This candle close absolutely disgusting, huge momentum and huge rejection to the downside in confluence with the 618, as well as that big level at 126 of resistance, excuse me. And so obviously this most recent weekly candle close isn't any more convincing, right? Like it's looking extremely bearish, right? Regardless of whether or not it's a doji, this is not the kind of candle you want to see after the amount of downturn momentum the week prior, right? And so obviously once again, this spells that a move into the 120s, 121s, 122s and everything else, as we see here on the daily, right? If we get the confirmed breakdown after seeing price move lower with strength below 124, 122 is a no-brainer for me, especially with the way the weekly is looking, right? Not looking strong whatsoever, but when we look at this in the monthly, even more so, even more so. I do want to highlight something. This arrow that I have spelled out here. We did get the move and the break above 121, this liquidity zone that we broke down from weeks ago, months ago. Obviously, when we get the big breakout to the upside, we need to see some sort of retest, right? So I'm not going to rule out the fact that we could be seeing a retest before further upside, but regardless, it doesn't help our case whatsoever wanting to see both the pound and the yen decoupled, right? If we see pound and yen downside, you know, we're going to see a ranging GJ, or we're going to have to pick our spots very wisely. So as I do with most weeks and every week for the most part, I'm going to want to lean towards the daily and weekly to add further context around where we should be priced, or rather where we should see price moving next, excuse me, especially with the amount of fundamental drivers that we're going to be seeing this coming week for the pound. Hope that makes sense. And so with that brings me into the pairs that I will be trading for this coming week, and it's a very exciting week. I feel that we're at a very pivotal point on the chart for GJ specifically, and I'll get into it here on intraday levels shortly. One thing I want to highlight really quickly, I know I mentioned on my previous pre-market plan, we started to make, obviously we had a higher high here, we made a lower high, and then a lower low, right? It was looking pretty grim, and I mentioned that I wasn't going to be taking shorts until if we broke 168, right? Only in that situation would I have gotten into shorts. I'm glad that I didn't. That was merely a retest before further upside. And so now what we're starting to see is a new high being formed. Obviously looking left, we have, even the local highs have been broken. Even, the most recent local highs have been broken here as well. So we have a new higher high. What is next thereafter? A higher low, right? Like, this is why I like to do this on higher time frames, just because it becomes a ton clearer. Doing higher highs and higher lows on the 1 hour is great and all, but it doesn't add nearly as much context for me and my strategy, at least when it comes to the daily and weekly time frames. So excuse me, this is a higher high. Obviously, when we see bigger moves to the upside, we start to see moves back to the downside, these small retracements before further moves higher. And so this is no different, but on intraday time frames, I'll get into it here in a second. We did close within a range, and I will be playing that range break very closely, whether it is to the up or to the downside personally. Before I get into intraday time frames, let's look at the weekly really quick. Weekly candle close, absolutely beautiful. Makes a very convincing case for further upside. We have the big break of structure to the upside, and then the clean retest. Look at these two candles, extremely clean retest of 168 and further upside. This looks like a bull flag in many respects. Just, we could go down in lower time frames as well, and becomes a lot clearer, but even from the weekly, you can see that the bull flag is starting to form. Something else I want to highlight: monthly cup and handle. 10 days left in the month. There is a ton of time to see this candle fill out to the upside if that's where we're going to be headed. Again, regardless of that, as long as we're above 168 with strength, I'm going to be looking for retracement, for bounces. But I do want to highlight we're at an extreme point in the chart. Excuse me. Great possibility, great chances for this monthly cup and handle to continue to the upside. Obviously, I'm going to want to lean towards intraday time frames to confirm that for me, but this is looking bullish so far. Let's look at the quarterly. Quarterly looks extremely bullish. 1 month left in the quarter. Something that is concerning for me, though, right? Look at this range, this level of liquidity. We've wicked into this level many, many times. Even, local levels, right? We've wicked into this and got rejected many, many times. Kind of had a little bit of indecision in here as well. But we're starting to see a break with momentum and strength in this candle to the upside. But this is still the 618. This is why I'm mentioning this is such a pivotal point on the chart for GJ. This is a major break sort of area on the chart for GJ. Are we going to see continued upside? We need to break this. Are we going to reject from here? We need to monitor this. This is a level of structure that is extremely respected, as we can see looking left, and I will be treated as such for me personally. We can even get into the yearly, right? Yearly, again, makes another case for a convincing case at that for further upside, at least into this range mid, right? That's a minimum of 177, a maximum of like 185 type of thing. So how do we tie this all together? Let's go back into the daily and into the 4 hour, right? It always becomes a ton clearer. Once again, we're at a very pivotal point on the chart. A big move is coming, whether it be to the up or to the downside. It is going to happen, right? And so again, I want to highlight this. We had this little double bottom play out, and I mentioned this in previous pre-market plans. We got the June high reclaim, the December 22 high reclaim, and we're moving higher. We are now at the 2022 high. This is a yearly high for last year. Whew. And so with that, again, this is still a very valid and very respected level of structure. As we can see looking left, we had a very clean rejection from this level. This is also, again, I can move this little half circle here as well to the right. This could also end up being a double top, right? If we break the range to the downside, I wouldn't, why wouldn't it be a double top, right? To form a third low, right? Until these patterns play out definitively to the upside, they're not patterns at the end of the day. Resistance is still resistance at the end of the day. Regardless of whether or not this is a double bottom, the high here, the 2022 high, that is the neckline that needs to be broken to confirm the move to the upside. And obviously we have the measured move perfectly moves into 175, which would, in a perfect world, that would be great. I could take longs there all day, every day. It would be amazing. But this is a level of resistance until it's shown otherwise, until price disrespects it and shows otherwise. We did see price poke its head above, and then Jerome Powell spoke, and we saw, downside momentum. So maybe that was just a news catalyst based off of what Jerome Powell was saying. And then obviously as we work the kinks out early into next week, we can see that level start to be reclaimed. And if it does, I'll be taking loans. Otherwise, I'll be waiting. But again, resistance is still resistance. I would need to see clearly defined strength, much like this candle right here. If we saw momentum with this candle, like we saw a wick above the 2022 high to the downside and then move higher, I would take that 9 times out of 10, 100%. But I need to see a clearly defined move with strength above the 2022 high to confirm the neckline break of this potential double bottom. Otherwise, this is going to turn into a double top very, very quickly if we see the break back down and reclaim of the April 23 highs and lower than that. And so it becomes a ton clearer for me, at least on the 1 hour. Look at how clear this is. And I want to highlight something again, right? We have higher highs and higher lows being formed. And once again, we see this all the time. Look at this trend line. Very well-respected, well-defined trend line. Looking absolutely beautiful. Every time we move into this trend line, we get a bounce. We started it right here. We move up, move into the trend line, bounce. Move up, trend line, bounce. Trend line, bounce. Even right here, even at the very top, we got the trend line bounce, right? And obviously I don't trade only trend lines, but regardless of that, we're starting to see not only the trend line be respected, but the ranges we're moving into, we're claiming and breaking and retesting and moving higher off of. That's very important. Looking left, this level right here at 170, 171 area, this April 23 high, very well respected level of structure, has acted as both support and resistance, and I will be treating it as such until it is broken. I will not be taking any sort of sells of anything. I will be taking buys at the April 23 high on stability. Something I want to highlight. Once again, with these trend lines, we either get these squeeze and they move up, this ascending triangle sort of formation to the upside. We can even take this. Boom. We can take the low to the high, and we see the ascending triangle go into the 173s. Amazing. Or we see it squeeze into this trend, into the levels of resistance as we currently see here. Lots of weekly candle closes, and then a move and roll over to the downside. So again, prices, as far as GJ is concerned, very pivotal point as far as I'm concerned, just because we're in, again, a very well-respected level of resistance, but also still being supported by a range that we have claimed and broken and retested above, being this April 23 high. Something, again, that I want to highlight looking left. Very similar, right? We saw this very big squeeze to the upside. Obviously, this trend line wasn't back here, but we still have a high, a higher low, a higher high, higher low, higher high, and another higher low at this trend line, still being respected. Most recent price action, most recent weekly close price action is still, it's looking like it's a little rounded top, little, wanting to roll over on itself. We won't know until the week opens, but regardless of that, we won't know until we know, right? Until price tells us. Looking left, we had a very similar situation. We had a brand new high created, a low, a higher high, and a higher low. But price rolled over on itself, and it wasn't until we see the big engulfing candle breaking back below and reclaiming the ranges below the April 23 high that we could have confirmed a move to the downside. I'm playing it the exact same way. Nothing changes, right? So if we start to see this squeeze, amazing. That's awesome. But if we roll over and we get a move below the April 23 high, we see moves with strength. I need to see an engulfing candle like this, rejections, and moves lower to confirm the move to the downside. That's the only way I'm going to take sells. I'll take sells on the break and retest of the April 23 high, November 22 high, but I need the engulfing candle and definitive strength below these levels. On the other side of that, we have a lot of weekly candle closes at this level of resistance around 172.50, 172 flat area. When in my strategy, when we start to see these weekly candle closes start to stack up, that spells out a very strong level of resistance, right? So I'll be treating it as such. Resistance is still resistance until it's broken, right? If we start to see the opposite play out from sells, right? We start to see these squeeze and move to the upside, and we start to see clearly defined strength. Like, look at these candles right here. If I start to see candles like this, candles like this, moving above the most recent weekly candle high, this one right here, the 172 sort of 50 area, I would take that all day, every day on a break and retest. If it has enough momentum, I'll put a buy stop on top of the candle all day, every day. But the general and overall consensus and sentiment from me, future me, this is me speaking directly to you. I am playing the range break. I need to see a break and retest of 172.50. At least the range break of 172.30 to want to get long. Other side of that, I would need to see the break and retest of the April 23 high, November 22 high to get short. All day, every day. 4 hour becomes a lot clearer here as well. We start to see clearly defined weakness below the April 23 high and below the 170.71 sort of area. I am taking that into the June high all day, every day. That is a no-brainer trade. I could literally take it from here to here, and this would be a 3R trade all day, every day, no questions asked. Same thing. I could take the break and retest of the 22 high, right? Put my stop right below the April 23 high, and we can make a move into 175 or higher than that. I can be even more, I can be a little bit more conservative with my stop here as well. Maybe I put it right here. Maybe I put it right here. That'd be the most practical. Regardless, we have a 3R trade in either direction. And obviously, when we get down into lower time frames, we can even tweak it a little bit more, right? We can make our RR even better based on the stop loss that we use, right? Obviously, taking structure into account and everything else. But pretty simple and straightforward. I'm literally just playing the range break on GJ. Obviously, I'm leaning towards, I am biased towards buys because of where we're at structurally. But I don't want to rule out the fact that we're at a pivotal point on the chart with a lot of news coming out, CPI, flash services PMI, and manufacturing PMI and everything else for the pound. And so with that, whatever is going to happen is going to have a lot of momentum behind it. And so I want to follow that momentum. Once again, I am still biased towards buys, but I am trading the range break of this particular level of structure. I hope that makes sense. Going into gold. Gold looks like absolute shit, but it did follow my plan last week. Let me go into the weekly. As I mentioned in my previous pre-market plan, we are looking like we're starting to roll over, right? And this most recent weekly candle close, it adds more conviction to that. Obviously, it doesn't have a ton of steam on it because of this wick, but regardless of that, we have still reclaimed the levels below 2000 and the 1980s, leading me to believe that we'll be seeing obviously 1930 and potentially 1900 very soon. We're starting to see a clean rollover here. And I can even look at this in the monthly. This is a triple top. Look at how shitty this weekly or this monthly candle looks, right? Also in confluence with the 786, although, we did blow past it just a bit. This is still a very well-respected level of structure. Obviously, we moved into the all-time highs, got rejected. This is a triple top as far as I'm concerned. Going back into the weekly, rather the daily, we do have a small saving grace here being 1956. But if I'm being completely honest with you, as we can currently see, we did have the higher high and higher low structure starting to form. That has now been broken. We now have a high and we have a low, right? So, as far as I'm concerned, the next move into 2000 is going to be the lower high being formed before a move to the downside. Obviously, with the dollar and everything else that's kind of happening around the dollar, I would love to get into reclaims of different areas. I'll get into that in the 4 hour and 1 hour, but I don't want to ignore the fact that once again, we have made the higher high, but we've made a new low. Obviously, you know, that changes things. That changes things a bit, right? We're having a shift in structure now. I did mention that 1956, 1959 would be the saving grace as far as structure is concerned. I would consider 1959 buys as long as we continue to see strength at those levels. But I'm gonna just be playing it by ear as far as price is concerned. Once again, we have a clear shift in structure. We had the channel break to the downside, triple top on the monthly, weekly's looking like shit. Overall, I'm still expecting moves lower. Looking at it on the 4 hour, it becomes a ton clearer. Look at what we got here. Let me know if you guys can see what I can see, right? Jerome Powell spoke. We had a big momentum candle. That's amazing. That's awesome. Excuse me. We are now in a new range. The range low being the 1759 or 1959 area. Range mid at 1980. Range high at 2000. What's happening though? This most recent 4 hour candle close is looking like a retest of this level of structure at 1980 in confluence with the 382 as it currently stands. So I would love, bullish scenario, I would love to see either a retest of 1959 to get into buys and a move and break of this channel and break of 1980 to reclaim that range into 2000. That's the only bullish scenario that I would want to play out, right? Otherwise, I would just be sitting on the sidelines. Honestly, with the way that that gold is looking at the current moment on high time frames, daily and weekly, I'd probably want to stay sidelined, to be completely honest, before getting into buys, because I don't think I'm going to be around to see a fucking a reclaim of 2000 and move higher. Like, I think 2000 is out of the cards as it currently stands. And so with that, once again, any sort of buys, any sort of bullish reactions, I would need to see at 1759 into the 1980s. But once again, this is still looking like a bearish retest after this big move to the downside. Look at how much momentum we had last week into 1959. We're just now getting a small bounce. Now that bounce could either take us again to 1980 before the rejection or all the way into 2000. 2000 does have that 618 confluence here as well. So once again, if you're a gold bear, more power to you, bro. Like, it's looking amazing for gold shorts as it currently stands. Looking at it on the 1 hour, we closed within a range, which is great, but we failed to reclaim levels above 1980. We also have, again, this big channel that has yet to break. Excuse me. In order for me to get bullish, in order for me to get into buys, I would want to play this channel break to the upside or to the downside. Obviously, I would consider buys at 1959 all day, every day into 1980, just because we're in the range. I would play it level to level thereafter. But the real buys with conviction are above 1980 for me. Look at how many times we held this level as support and bounced from it. I think overall, the safer buys would be above 1980. 1959 buys would be a little bit risky. 1980 buys into 2000 would be a little bit more sure shot, higher probability as far as I'm concerned, not only because of this channel break, but because we'd be reclaiming the 1980 level that we used as support, which is now acting as resistance. Other side of that, we see the clear rejection on the 1 hour of 1980, again leading me to believe that this is a bearish retest of this big move to the downside. If we see the move back into 1959 and a break with strength below it, break and retest below 1959, I would consider shorts into 1930 all day, every day, before price finds a floor. As it's currently standing, again, we started to see price roll over on the weekly and daily for gold, starting to roll back over into the 1900s as it's currently standing, and that's exactly what we saw to start the week off, right? We had a huge move to the downside, and we're starting to see retracements of that bigger move. Again, as I mentioned on the 4-hour, that retracement could either come at 1980 or at 2000. And so I want to be aware of that. I want to be cognizant of that into this coming week. Again, 2 scenarios for me to get into a trade on gold, although I would rather be sidelined right now. I'm not going to lie. I would rather be sidelined. But if I am going to get into a trade on gold, it would be the break and retest and reclaim of 1980 into 2000. Bearish scenario, we see the break and retest below 1959. There's clear traffic. Nothing going on below 1959. And I would play that move into 1937. Hope that made sense. Pretty simple and straightforward, as with every week. Again, I just want to sum this up really quick for my future self. I am playing the range break of GJ. I'm biased towards buys, but we are at a very pivotal level on the charts. And so we have a very big level of resistance ahead of us, right? Again, I would take breaks and retests above 172.30, 172.50 sort of area, break retest into 173 and 175 areas. Other side of that, if I'm getting into shorts, I would need to see clearly defined weakness before below the April 23 high at 171 and 170.90 area. I would play that into 170.18 and lower than that. Overall target for me would be the December 22 high. With, I would potentially take partials at like 170.15 if we start to bounce. Or again, if I don't want to get in all the, I'm just, again, hypothetical scenarios here. Or if we see clearly defined momentum into these levels below the April 23 high and we move into the last week candle mid at 170.17, I would potentially wait for the bounce, the break and retest of the November 22 high before getting into shorts thereafter. So I hope that made sense. Future me, I love you, bro. I hope you're continuing to do your thing. Take advantage of every opportunity in front of you. Life is hard, but you're harder. You're the fucking man. I hope you're living your life to your utmost potential. Don't take no for an answer. I love you. God bless you. And God bless everybody watching. Take care.